Good morning, everyone, and a very happy Chartered Accountants Day on behalf of everyone at Tally Solutions. Every year, on the day of establishment of the ICAI, National CA Day is celebrated to honor the Chartered Accountants across the nation. You, the CAs, with your technical competence, professional standards, and veracity, play a great role in the development of the country. You, the CAs, have intensified the focus on emerging financial and economical trends of the country, thus raising the profession of accountancy to new heights of excellence. Today, we have organized a special line of talks by expert CAs talking about the emerging opportunities for CAs in practice, technology, and the future of CA profession. For the first session, we have CA Venugopal, who will be taking on the very hot topic of mandatory audit trail for businesses. Please welcome CA Venugopal. CA Venugopal is a practicing chartered accountant. He is a partner at firm Venu and Vijay. He's an active speaker at ICAI on GST topics and technology and its implementation challenges. He is the author of various publications of industry-specific handbooks, and also he is the man behind the cloud applications development and managing, such as TaxSmile and Insa Financials and others. Please welcome Venu, sir. We're happy to have you.
Thank you, Komal. Thank you. Okay, so it's very heartening to see the CA Day being celebrated by Tally, and very eminent the panelists. We have Siman, Arpit, Jiten Bhai, Vatsal. It's good to have and giving you a feast of different thoughts. And the hot topic which had actually come up is the mandatory audit trail for the businesses. And it's good for Tally to take up this topic and definitely dwell upon different aspects on it. We are going to look at what is the new expectations from the Companies Act and are we ready for it, all those things. So I'll be walking through the notification which has come, the legal provisions which is expected by the MCA and the implementation dates, and what are the practical challenges or the industry readiness that needs to be there. This is one notification which is actually affecting most businesses, the corporates, and all chartered accountants who are auditing those corporates. Let's look at what is the expectations from the Companies Act. So there's an amendment to the Companies Amendment Rules which has happened to the 2014. Two amendments happened. First amendment on the Companies Accounts Rule, wherein they have inserted a proviso to the Rule 3 Sub-Rule 1, which said that every company which is using an accounting software for maintaining its books of accounts shall use only such accounting software which has a feature of recording audit trail for each and every transaction, creating an audit log for each change that is made in the books of accounts, along with when such change happened, and also one has to ensure this audit trail cannot be disabled. So every corporate has to ensure this. This is from the corporate side. There's also an amendment from auditor side. While I certify the financial statements, issue the audit report, there's an expectation in the CARO report, the clause G, wherein I have to give an assurance whether the company has used such accounting software for maintaining the books of accounts which has a feature of recording audit trail along with the audit log facility. Has it been operated throughout the year for a recording of all the transactions in the software? This audit trail is not being tampered with, and along with the books of accounts, the audit trail is also preserved or retained for the purpose of the limitation of the records that needs to be kept, and from when this is likely to be effective. Originally it was contemplated for 1st April. Then on the company's second amendment rules mentioned that this would be applicable for the financial year commencing on or after 1st April 2022. So anyone who is commencing their financial year on or after 1st April 2022, this has to be implemented. Now this is the expectation. Now let's look at, with this expectation, where are we? Is like, what is the industry readiness? What are the challenges in implementing this? Are we ready for it? Do we need any clarification? I have highlighted various issues that are going to come up in implementing this. Now, firstly, we should appreciate the efforts and intent, like the most of the points which have come up in the CARO and the company accounting rules that have been amended. This is really good. Like the direction to which this has come up, it is good. Now, at a conceptual level, this is this I would personally feel this would take transparency and the trust factor on the corporates and the government. But however, owing to various things, the first and foremost thing, if I have to talk about the size of the company, is it applicable to everyone? Like, is there a relaxation to a smaller company, 1-person company, or it's a newly incorporated company, no turnover, it is only R&D expenditure, or someone who is having a turnover less than 10 lakhs, 20 lakhs, 1 crore? Is there any relaxation restriction, or is it plain applicable to everyone? That is, one has to look at it. As of now, it is applicable to everyone. Everyone have to be ready for it. The next clarification that is sought or is required is, which is the software they are talking about. They are saying the software maintaining books of accounts, the software which is maintaining the books of accounts. Today, we know the books of accounts scope has expanded. If I have to go to the literal meaning of the books of accounts, there are primary books and subsidiary books, like what we have studied in the basics of the PUC class 1, +1 and +2. But if you look at today's businesses, there is a POS machine for billing. There is manufacturing software which is there separately. There is a CRM. Today, the books of accounts are confined to financial transactions. Now, given that there is lot of other softwares which have been maintained, treasury is a different software. There are a lot of companies who use, say, Tally as an accounting software, who post one consolidated data entry at the end of the day. Now, this audit trail scope has to be expanded to which all applications is also have to be looked at. For the purpose of preparation of Schedule 3 financials, we take the financial data, say, from the Tally as a books of accounts. But there are softwares which are beyond. So while implementing this application, people should also consider all the other applications which has a direct bearing of the bookkeeping. Next, is there any industry benchmark software which we can say that, okay, yes, this is a software which is good, please use that? Do we have anything set? As of now, there is nothing, and there needs also some guidelines as to what are all the softwares which have been reviewed and it is good. One fundamental thing we also need to be aware of is human errors. You know, while audit trail aims to penalize those people who make fraudulent transactions and everything, but we should also be cognizant of there are inherent human errors that happen, and casting errors, transposition errors. While doing a data entry, there are errors. Anything which got to do with those, the simple errors, like while typing an entry as 6093, it got posted as 6039. Now, these kind of errors are very basic, very likely to happen. Is there a requirement that the classification of the errors also to be done in the audit trail, so that to track the fraud, anything a transposing errors? Now, please note, a change in the zero can also lead to a fraud or anything. So, to what extent I have to limit the corrections or audit log? If you look at an voucher entry, there could be an error in the date. There could be an error in the person or the party, maybe debtor, creditor, which has been selected. There could be an error in the narration that has been typed, or there is a reference against which the payment has been received or paid. There are errors. So there are errors. Correcting the financial numbers, correcting non-financial numbers. What is that error that needs to be considered and classified is also maybe a clarification that is required, because the human errors can travel to different errors, different places. Now, when we are doing the track, from which point the tracking is required? Today, the organizations have maker checker process. I, as an accountant, does the data entry. Once the voucher is saved, someone approves, or he doesn't approve, it comes back for me to do a correction in the data entry. Maybe I have selected something wrong, everything. So there is a workflow. Now, at what point the data has to be tracked in the audit tool? Should every transaction as it is being recorded should be tracked, or is there a data cutoff point where, okay, this transaction is committed to the database, which is hitting to the books of accounts? Like we all know this, like we have an optional vouchers, like I create the transactions for the future, keep it optional and make it live when the date comes. Or there could be a situation where in the full voucher entry screen, I have around 30 data entry points. Before I hit that save button, I am doing a lot of data entry points. At that, the data entry points itself, I will be making correct. I selected one party, like then it went to selected another party. I haven't saved the record yet. I'm just creating a voucher. I'm creating a voucher. So from what point this has to be tracked is also a clarification one should be seeking and one should be implementing. Why am I highlighting all these points? When a compliance has to be done, the compliance has to be in a holistic way. So one has to be really be aware of what is the expectations of the law, and it has to be done according to the law. Maybe at this point, we definitely needs to be wherever the stakeholders are involved, have to raise these points, get it clarified from the experts. Next thing, the software which I am using is like, am I using a right software? If the law is mandating that the business use a software which is audit trail compliant, so the expectation of the business owner as well as the chartered accountant is that who is endorsing that everything is right. The expectation is we are using the software which is as per the law. Now, the primary question that would come up is the software which I am using, which is a generic software. I did not get it prepared by anyone in-house customization. It's a generic software which I am using. Is that software which I am using, is it compliant as per the law? Is the first thing that comes up. You know why? Because India is a hotbed of the 600 different accounting softwares. Now, am I using the software which has all these features? Today, if you honestly see, every software would claim that it is audit trail compliant. Now, assuming relying upon their statement and I have taken up the software, would I be penalized at a later point that I am not compliant? Is a point that needs to be considered. Then there should be an awareness program. Now, why am I saying that there shall be an awareness program? Although it is an accounting control perspective, since decades I am using a software, and the scope of implementation restricted to only the financial transaction or an application which is leading to the financial transaction, that needs to be looked into. And it also has to be definitely be looked into from when that it has to be implemented, that each stakeholder from independent director, managing director, accounts manager to the junior most accountant, everyone being aware that okay, whatever which has been done, which they are doing, it is really right. Then the last step, a very important step, is the business ready. Is actually businesses ready? If you look at the original order which has been issued on 24th March 2021, signed, and maybe it is made available to the public by way of circulation, we got to aware as on say 25th, 27th, 30th, this order was released or made available. And the original order implementation date was 1st April 2021, which is actually technically less than 1 week from the date which is announced. Now, as I said, there are 600 odd software companies. Are they really prepared to make those changes into the software? Like, was it a thought through when the original order was issued? Like, shouldn't we consider the whatever is the business readiness? The second order which has issued on 1st April, that has a planned note which said that it implementation date is deferred to 1st April 2022. Now, there is sufficient time. Any small change in a software is like, with my knowledge on the programming, implementation, everything, it would take 6 months for someone to really test it thoroughly, make it go live, and do an alpha testing, beta testing, and make it available in public. So these softwares also are really not ready. So there's definitely a breathing time, teething time should be given to them. And I would appreciate the second order which has come, making the date to 1st April 2022. But there are different industries, like a hotel industry having a different application, airlines having different application. Every industry has different applications. So all these stakeholders, which I'm saying is the finance heads, CFOs, the directors, the accounts heads, have to consider all the other applications which are integral part to the financial application to be aligned with the compliance of this order. The last thing which I would like to say on a closing note, that there is definitely nothing is a foolproof, but however, having an audit log audit software is really good. Definitely, it is an appreciable welcome move. However, the points which I have raised, these would be a concerns for the industry or the software provider as the go live nearing date comes in, wherein they would want to say that I am compliant. I do not want any qualifications in my audit report saying that okay, I am not in the compliant. So better, if the go live is 1st April, can I start implementing from 1st December, and someone verifying and say yes, whatever you are doing, it is in line with the law. it is what someone really wants to be looking at. I would say for a country like India, where the businesses are vast, the size, geographical, and the language barriers are very high, there shall definitely be an awareness programs and the training programs and the clarifications. The penal consequences of non-compliance also should be spelled out very clearly. And what is the impact if someone can, we cannot go back in the history and time and start recording transactions with an auditor. So considering that there are other implementation challenges, so the rollout has to be definitely be very much handed over smoothly to the businessman and to the auditors. This is what is definitely expected. One has to do it and they have to take care. I think on this note, I would leave the forum to take up any questions that comes up on how this has the implication. You know, we are not just dealing with multiple softwares, we are also dealing with multiple compliances. Today, while finalizing Schedule 3, like Ind AS, IFRS entries gets posted. While finalizing your GST audit or income tax audit, ICDS entries get posted. So the financial books of accounts will also capture the entries which are required for other books of accounts also. Hence, it is definitely important that every user is aware that, okay, they need to have a software which has a log and they need to test it that this is working and compliant. So on this note, I wish again every chartered accountant on this CA day. It's actually a great achievement to be a chartered accountant, and I'm very happy to celebrate along with all my brothers, fellow brothers and sisters on this occasion. And I also thank Tally for taking up this initiative of connecting chartered accountants on this day.
So thank you, Venu sir, for a very insightful look on this topic. I'm sure our viewers here enjoyed it too.